Hello, friends. So, today in this particular segment of our presentation, we'll be discussing something on reverse mortgage, a very innovative product which has been brought in into India by, like, again, you see, everything is getting developed in Western world, and we are just trying to bring it into India. Now, usually we have heard this term called as mortgage. Real estate loans, like home loan, they are very common. But reverse mortgage is actually, if you look into fundamentally into our society, we do have a concept of joint families. So here, this concept of reverse mortgage practically was not viable earlier. But with the passage of time, now you see we are having nuclear families. People don't stick or they don't stay together because of their job requirement, because of the changing style of life that we do have, because of lots of like you see variations in expectation. So people do have their nuclear families, and in this new system of life or society, you see when you grow old, there is a chance that you may not have anyone to take care for you. You see, our previous regime, our previous our parents and their parents, they people were getting pension, government jobs were there, so post retirement something is there as a source of income. But now you see things have changed drastically in private sector. Pension is not a product anymore. You have to save it off your own. So if whatever you save is lost in a medical treatment or something, then again post retirement it is a big challenge. I don't know how we are going to sustain, and it is going to be a major problem for majority of people in almost every developing nation. So situation is same all across. Savings are very low, inflation is very high, cost of living is very high. So whatever you are earning, you're not able to sustain. And what about saving for future? So you see, reverse mortgage is a very good product which comes as a like a rescue in this situation. So this is actually nothing but, you see, what, let's say you need to have a house first. Without owning a house, and second thing is like it is only meant for senior citizens. So in India also now this product has gaining popularity. People have started inquiring for it. Earlier it was a concept of West, but now in India also many senior citizens, they have opted for this product where they don't have the next generation to take care for them, where maybe possible that they don't have regular source of income, or if they have any regular source of income, they don't have like that source uh, sustaining their all their requirements. So you see it is sometimes challenging for them to survive. So hence now you see this product is mostly suited for people who don't have any dependent. So you cannot rely on someone. And you see, let's say you have an expectation of 70 years, any up to 60 you are going to work, and then 10 more years. What if due to your environmental changes, due to your technology, due to the quality of infrastructure, medical infrastructure you have, your survival rate goes from 70 to 80, and your death is getting delayed by 10 or 15 more years? Who is going to bear your cost? So there you see, this is a wonderful product. So you buy a house today, and throughout your service period you suffer a lot paying for installments and all. But you see, this pain that you are doing it now, this painful exercise will help you later down during the period of your retirement. Okay, it will help you to have a very life of a independent person with dignity, with well established dignity in life. You need not to rely on your next generation. Okay, now market is so complex, you don't know what type of situations are going to happen or emerge for your next generation. So you should not have much of expectations. So let's go in. This concept of a reverse mortgage is actually introduced by National Housing Bank in India. Okay, in India, National Housing Bank is your apex authority. So they have brought in this product for senior citizens to get easy finance for their living. So what we are doing, actually, you have a house. Let me give you a crux of it. You have a house. This house belongs to you. You don't have any outstanding loan on it, or you have a clear title to this house. What you're doing is like you're giving your house to a bank, and you're taking the you're going to encash your total investment in your house property over a period of time, let's say 15 or 20 years. Okay, so during these 15-20 years post retirement, after your documentation is done and your eligibility is fixed, you see, bank will be giving you two options. You may take a lump sum value upfront, or you may take it in the form of a annuity. Annuity means after a periodic interval, every month or every quarter or every year, bank is going to give you some money in your account. You can use that money for settling all your dues and living a very comfortable life post retirement without depending on anyone. Okay, the loan that you are, the money which is given to you is actually a loan. And this loan, let's say you do have a person who is your, let's say, he is your nominee, he is your legal hire. Let's say you have a legal hire, your son or someone else. Now you see, you have taken a reverse mortgage loan from a bank. Let's say your son would like to retain this property, so in order to regain the rights to use this property, they have to pay it to the banker. So it is going to be a very commercial transaction. So nowadays, where parents don't expect much from kids, kids don't have any obligation towards their parents. So it is very practical and very materialistic environment. So in such an environment, I see that this type of product is going to flourish. Maybe not now. We don't see it happening in India now, but 10 years down the line or a couple of decades, you see things will change drastically. Westernization is coming in. People will not be able to help their parents. I'm telling in my own case, I'm not able to help my family members. Family means my mother, father. They are already independent. They are comfortable. Why? Because they have their element of pension. They have their element of post retirement savings. They do have an element of their own house. So they are independent. I'm not. The point is, like, if I'm not competent enough to help them, so I can realize the relevance of this particular product. Okay, so if I don't have a house, it is very tough for me and my family, especially my wife, to survive in post retirement days. So you can have this concept. Now, borrower don't need to pay anything. You see, rather you are going to get this installment in your account on monthly basis. It is like you're getting some advance payment for your final settlement of your house. On your death or after your death, your spouse is allowed to stay in that house. So till the time you stay, you can use this property. No one is going to ask you to vacate this property. Usually it is for 15 to 20 years after retirement. Any the eligible person who is willing to take this loan should be 60. So 70, 75 is average. Even if you survive this 75 years, so bank is making a contract for 15 years. What it means, bank will pay you the total amount of this house in 15 years in equated installments. Okay. Now, out of this, if you survive 75 and you are still alive, you see, bank is not going to ask you anything till your death. Once your death died, then only they'll be taking the possession and will be using this property for maybe auction to sell it to someone else, or maybe they will decide what needs to be done. If your legal hire would like to take this property, then they have to go to bank, settle the dues. When it comes to settling of dues, means whatever amount of money bank has given to you in this particular contract plus interest on the same will be cleared by your legal hire to get the rights for this particular property as user. Okay, so you see, this is how it actually works. National Housing Bank has given some guidelines where they have given us ceiling key, like up to 75% to 90% of your house can be given as a loan. Okay, let's say your house is as on day 1 crore rupee, so 90 lakh rupees maximum you can get. And this range varies between 75 to 90 lakhs. Now what they are doing is, like, they're keeping a margin one, so that if property value falls down, they'll be in a comfortable zone. Second thing is, like, they're not going to give you this thing in a upfront. They are going to give you an installment. But if you want everything in upfront, then they will be further giving a discount onto this value. So loan to value means total property value to what actual amount of money they are going to give it to you in your account, and it is in the form of installment. Be careful. This is in installment form. We'll discuss one more product of reverse mortgage, where banks will give you upfront money, and then that upfront money can be used for your exposure in stock market, and it is not done by, like, you see, right now banks are not doing it. So, but you see, we do have a provision where these insurance companies, some of the insurance companies, private sector insurance companies, are coming up with this new product where they will be giving you better returns or better monthly installments as compared to a bank, due to the market phenomena. So if market is high, you will get very high return. If market is low, you may be getting some low return. So they'll bring in a portfolio between debt and equity as per your choice, and will give you your returns accordingly, which is much better than your bank's fixed installment which they have planned. Okay, so reverse mortgage. What is a reverse mortgage? It is actually a product which aids senior citizen to get easy access to cash. So they'll get it very easy. You see in this picture, one banker is counseling a senior citizen couple. So they are looking into the documentation. So why they need this? Actually, in senior age, sometimes it is possible that you may have a medical emergency and that requires heavy cash. Who is going to bear for it? Your kids may not be in a position to finance it, so what option do you have in that situation? So if you have a house, you may sell off your house and may recover some proceeds from the same for your own medical treatment. Okay. So in this case also in medical emergency situation, banks and the other insurance company example which I've given you is like they'll give you some lump sum amount in advance for your medical treatment. Okay. It varies from service provider to service provider. The borrower can pay. Now, borrower, who is borrower? Borrower is this property owner, can prepay the loan. If you have your resources, you get it from somewhere. Let's say your kids working in foreign country, they're sending you foreign exchange, like they're sending you money to clear your dues. You see, you can clear your dues with your banker anytime you want and without any charges and penalties. You see, this is a good thing. Yani they have an element to clear your dues also without much of botheration. You see here, what are the eligibility criteria to take this loan called as reverse mortgage? It is like your age should be above it 60 years. If it is a couple who is coming forward, so one of you should be above 60, second one can be up to 55. Okay, so but not younger to this age. Then next is like the borrower should have a property. This property should be a recognized property. Like I give you an example. Like in villages, we do have an area called as Lal Dora, in Punjab. When I'm speaking in context to Punjab, there is a place called as Lal Dora, a village area, rural area, where your registration is not done. So banks will not be willing to take exposure into such properties which don't fall into your municipal corporation limits. Okay, so need to check this thing. So in case a couple is coming forward, then one of you have to be 60 years and the second spouse can be at least 55 years or above. So both are considered as senior citizen. The property must be a permanent resident of an individual. Out of these two, at least one of them, they are staying in this house. Why? Because we are going to allow you to use this house and we are going to make payments in advance in final settlement of your property. Okay. So property must be in existence for at least 20 years. Now, this is again in case. Any the property which is there in use, the person who is 60-year-old whose name is there in this property, it should be there with this property associated for last 20 years. I don't know the rationale of this condition, but they have put up a condition. Some players may put in their own restrictions. This is maybe possibly this is put in just to check the number of applications and then limit the loan exposure only to very selected clients. Okay, so who are the present lenders or the agencies who are giving this type of facility into market? They are like leading bank, State Bank of India, Andhra Bank, Corporation Bank, Canara Bank. See, some of the banks may not be there in existence now. They have gone into merger. So Diwan Housing Finance Limited (NBFC) is there. National Housing Bank itself is giving an exposure. So LIC insurance company is there. PNB is there. Indian Bank and then Central Bank of India. So you see, these were some of the service providers before mergers, and after merger, only few of them they are left. Now, in this slide, we'll see how do we calculate loan to value ratio, and it varies from client to client. Can you see the image in the bottom? Here, it is very clearly mentioned the primary lending institution will define it. What are the various factors which define this loan to value ratio? So, it is actually the prime lending agency who is going to give you the money. They have certain terms and conditions. This is important. Second is the age of the borrower. So if age of the borrower is less, loan to value ratio is low. Can you understand the rationale? If someone who is young, he's just 60, has started this reverse mortgage plan, you see, you need to understand this fellow has a long probability to live for a longer period. Hence, loan to value ratio is kept as low. Okay, someone who is of old age, you see, their probability of dying is high. Hence, they are given a more amount. So 80 plus, you see, they can die any moment. So they are given 75% loan to value ratio. I'm sure that you are clear with this concept of loan to value ratio. Let's say your property is rupee 1 crore. What maximum amount of loan can be given to you is in this case where it is 80 and above years of age, you can go up to 75 lakhs for 1 crore rupee property. Okay. You see, the point is this amount will be kept outstanding only for a shorter period of time, because death is a high probability in 80 zone. Okay, but this fellow, if he's able to survive 100 years, up to 100 years means 20 more years, will be a big botheration for banker. They cannot do anything. They have a set of agreement where it is clear that they mention it, the person can retain this property till his death. Let's say you are a married one, so after the death of husband, wife has to stay in the same property. You cannot do much with wife also, but after wife's departure, you can take the property in your custody. Now this is all about reverse mortgage. Thank you.